wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M Plus Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Okay, hello everyone. Welcome to our weekly M Plus Weeks highlights. I am Louis Lau here. I will be sharing with you on this session and just see what we can find out from the stock market today. Okay, so overall, I think we need to see that the trend has shifted from a more positive stance last week and towards right now is more negative. You can see that most of the things are falling after the very strong, especially on the plantation stocks. A lot of stocks has went up strongly last week, and this week itself it has plummeted. So the reason is being right now, the oil prices are also falling, and that's affecting the sentiment on the CPO prices as well. So another view into this scenario is also because of very strong recovery last week, and therefore it has hit a point of overbought, and we are looking into some selling pressure on the plantation stocks. And need not to say much, technology stocks are affected due to the interest rate high anticipation of the upcycle. In view of that, people are looking into the growth stocks to pull lower down their exposure within the growth counters. So technology stocks definitely is one of the main reason. The main reason of it is definitely the interest rate hike upcycle that people are anticipating, and we are getting closer to March, and that is where people have lesser money to put in to all these growth counters. And I believe that in KLCI and the rest of like industrial products, these are all because people have anticipated, aluminum prices has people has anticipated to continue to surge strongly due to the Ukraine and also Russia tension and things like that. But overall, you can see that the rest of the industrial products are also falling because we look at if there is a war, or there is some clashes, there is some rising tension between this Ukraine and also Russia, and that would actually make commodity prices shooting up. But if it is fading in terms of all this tension, and that will allow all these commodities to pull back or retrace in terms of their price action. So you can see that all that are related to commodities went up last few weeks, but today itself, after the tension has eased off a bit, we can see that the prices are also pulling back. So that is the reason we can see the industrial products are pulling back, and plantation, and these are the most severe ones. So you can see that mainly they are related to the very strong overbought situation earlier on. And what about energy? Energy did being affected a little bit, but it's not much. I think the oil prices are also just hovering around 93, 94. So it's not that severe yet. Unless it is falling below 90, then then perhaps the oil and gas counters might hit some setback. But overall, if you notice the oil and gas or the Brent oil prices, they are always around 90 before even the war started. So the war started has created the 90 US dollar per barrel mark towards 96. So right now it's around the 90 to 93 level for the time being. So it's not really much affected. The fundamental side of things, the supply and demand dynamics are still pretty much intact on the Brent oil. Okay, so that is just a brief summary of what we are looking at the how do we look at the market. Basically, more profit taking activities today due to a lot of overbought situation in last few days. And right now, what is actually booming up is actually property sector, the construction sector, some financial services, and utilities. But I also noticed that transportation and logistics are also up and running. So maybe we can actually also focus on the transportation and logistics later on. So before we go into the identify what are the stocks that we put in today and what are the logics behind it, what are the reasoning behind it. Maybe we can do some technical analysis on the sectorial wise view as well. Okay, so let me put you into the next chart. The next chart of yep. Hold a second. I will switch chart for now. Okay, I think we need to go through a list of sectors to make sure that we understand what is strong, what is not as strong. So yeah, let's go through this construction sector. So in my view, construction sector seems like it is on a potential recovery mode, and this has started to break out last week, 17, then 18. It has been quite stagnant. Today there is a little bit of breakout. But overall, we can see that the DMI, which is the ADX indicator, are in a positive region. So which means that there could be some potential recovery from this point. Okay, consumer products, I do anticipate things to become turning into a much positive mode in the upcoming quarter, especially when the result reporting season. You can see BJ's food, Berjaya food result is very strong, and it has given a strong signal to most of the consumer stocks or most of the business activities out there to say that revenge spending is really there, and that is why you can see a strong potential recovery in terms of consumer sectors earnings. So that's why right now, if you notice the signal wise, it is actually on the positive side of things, and it is trying to retest the SMA 200 level on the consumer product index. Today there is some profit taking activities. I'm not so worried about it. I'm anticipating the pullback will be healthy, at least towards around the 580 level, and hopefully that could rebound even higher. I think earnings wise, if there is a lot of surprise situation in fourth quarter in upcoming next week, then we can actually explore further in terms of the consumer sector. Okay, so other than that, energy stocks are pulling back. This is due to uncertain situation in terms of the Brent oil prices. Right now, people are saying that there is some truce, there is some Russia are not going to have a war with Ukraine and things like that. So it has affected partially in terms of the attractiveness of the oil and gas counters. So I mean, we do not want to have a war, but we believe that the fundamentals of the crude oil prices will sustain above at least above US dollar 90, and hopefully they can reach around 100. So just that the recent 90 to 96 level of trading is spike up due to the war situation or rising tension. So that's why that has given the trading opportunity for the oil and gas counters. Okay, so other than that, we can just check out the small cap index, because it's very important that we know what is the direction and is it still positive, and where abouts are we going to take a profit. So for now, I think it's just a healthy retracement. I don't see a need to have a pullback in terms of your exposure, but overall I would say that this week itself is definitely a pullback week. But as long as this small cap index is still trending higher, and it is still having a positive tone in terms of their DMI indicators, I still will hold on to the counters or the exposure that we currently have, because small cap index is still on a positive trend. Okay. Um, Other than that, I will look into just now what we have mentioned, the property index. Property index is very strong, and it still will maintain the attractiveness at least above this 742, 743. I think there is also a very strong indication that it might also continue. Okay, let me show you what do I look in this versus plantation sector. Okay, if you look into plantation index and also the property index, it is actually very similar, because of it has recovered, you know, from the bottommost formation, breaking out, and then it has surged above SMA 200. So similarly, you can view this as similar to this range here. It has broken out above previous high, these two highs, and therefore it has continued to surge higher. So I think this is very much uh, that we are going to anticipate in the property index, and therefore we are looking into property index today. We have put in at least two counters for property index, and it has turned out to be a winner for now. So if you notice, property index and also construction is actually following the movements, okay, following the movements, but it's not as strong yet. But this could be taken as a start, okay, as the start of the new upward trend. So I think construction sector, everyone should take note of that. I think Gamuda IGM is starting, the ball rolling. I think next one might be Jack's Resources. Jack's Resources is also under the construction sector, and it has started also to move higher. So I think, just to give you an idea that what we are looking at right now in terms of sectors, and what are the attractive counters at this moment. Okay, and other than that, I think transportation and logistics is the final sector, because I think we can actually focus on just four, because the rest are actually in the pullback formation. So for transportation and logistics, although after the recent rebound, it has hit resistance around this zone, but don't forget that last quarter we did notice that Harbour is a logistics company that made a very strong earnings. Okay, so Harbour. So we can actually look out for what is the earnings, that is going to come out next week. And if once there is this is a reporting season, after reporting season, it straight away shot up. And so people are actually anticipating things to happen to be much stronger as well in the fourth quarter, because most of the places are reopened, and therefore we should be anticipating further upside for Harbour. So Harbour might retest the 150, 160, 170 level. That is my view. But again, if one counter is already providing the signal that they are going to provide strong earnings going forward, then the rest of the pack will follow. So that's why you can see most of the counters like CG Century are up, and are up last week with some good volumes, and also Maybach is also recovering from the bottoming out formation. Okay, so today itself there are some trading opportunities. So overall, I see some trading activities within the transportation and logistics, the property sector, the construction sector, and also the consumer sector. So that is why the idea behind it, to form the 8 counters for today, we have put in SP Satir, we have put in EcoWorld. Okay, so these are the two companies under the property sector. Okay, so yeah. So before we go into the daily picks, okay, make sure you have a sharer badge in order for us to review your counters later on. So please make sure you share the video out, and also click the like button and subscribe to our channel. Okay, so let's move on to these topics. So what is the reason behind it? Just now we have talked about what we are monitoring in terms of sectorial wise. We are monitoring those sectors that are uptrending, and they're sort of the trend is actually emerging on the upside. So so transportation and logistics definitely is under our under our radar, in our radar. So this has actually came up on Friday, and today there is some follow through interest a little bit above the 64 cents level. We are still anticipating that the uptrend may sustain. Okay, wait for a second. Let me So the uptrend may sustain until this level here, 67.5 cents. Cut loss point is near towards the 63 cents level. So I see this as an opportunity to hold on until the results is out, and hopefully that it can, or whichever way, because I think if let's say one of the companies are releasing results much earlier than the rest of the pack, then you can trade the laggards and hopefully that they will run in tandem, okay, with the previous companies. So for instance, this likely to come out near towards maybe this week or even next week. Then we have to monitor when the others, the peers are actually announcing their results, okay. Ecoworld, just now we mentioned, we believe that the property sector has some room to go, especially Ecoworld. Ecoworld has made a breakout above the 102 level, and it has started to trend higher today. So today itself, we have been seeing the signal came in around 104 towards 111 level, so it's around 7 cents of trading. So it has traded towards the 116 level as well. So I would say that the next resistance will be around 116, because the previous part of the day you can see that they have traded there as well. So I would also assume that 122 is also a good place, a good opportunity to take profit as well. If there is an opportunity here, which I think very very high chance that it will continue because of the breakout, and also volume wise are strong, we are looking into a very strong position towards 122 level. Okay, then SP Satya is also just breakout today as well, and it has triggered us a signal from 133 towards 142 trading opportunities of around 9 cents. So this is also quite amazing, quite bullish. I would say that this is very likely that it will continue to trade higher towards 148. Okay, so I think the property counters, there should be some good opportunities within this sector, and I think there are quite a number of stocks that we pick under this property counter should turn out to be a winner, at least for this week itself. Okay. Other than that, plantation counters, SH Chan, we did put in, but I think it has hit the hit some resistance around this level here, so we have to wait. This we have to wait. This is a bit much of a laggard as compared to all those heavyweights. So this is much slower. Their rally was started around 45 cents towards just 57 cents. But if you look into B Plant, if you look into TH Plantation, they have traded to 80 cents, even 90 cents. So I would expect this to actually follow through. But today might not be the day for them, because they are still having some, they are still considered as laggard. So we thought that laggard would also catch up one day, but it needs some time. So today there is a breakout, but if it is holding above the SMA 200 level, then it should be still okay to hold on 54 cents. If not, then we have to cut if it's breaking below that level. So these are the two levels. 59.5, 63 cents is being given as a resistance. So if there is a pullback and rebound, that would be the target that you are going to monitor. Okay. Oh, so Samcam and also Pantech is under oil and gas stocks that we anticipate there could be some trading opportunities after the breakout of the Brent oil prices above 94. But we didn't know that this morning there is after the session started, they only announced that Biden and also Putin is coming to some agreement and things like that. So the oil prices has fallen quite a bit after 10, I think 11 9 to 10 a.m. and that is where we have put in our oil and gas counters much earlier at 8 a.m. in the morning. So the news came out. So there is some resistance coming out from Samcam for the timing for most of the oil and gas counters as well. So let's monitor. Although we say that the oil sentiment is actually affecting the trading. But I think the earnings wise will sustain for Semcam, and it should trade at least towards the previous high, which is near towards 104 or even 105 level. So I still see that. I still anticipate that oil and gas counters will continue to rise, and will break out above the near-term resistance around the 1 ringgit zone towards the 106. Okay, for Semcam. So Pentac is the same idea, but it didn't trigger us yet. OWG is a recovery team play. We are relying on the Genting Berhad, Genting Malaysia team to come back, and then hopefully that there is a breakout on OWG. But so for now, it is still we're still waiting for that to happen yet. So it hasn't happened. So yeah. Okay, so we have come to the end for the daily picks analysis. Why do we pick this, and what are the trading range that we have in mind for most of the counters? So we will review some of the stocks. So make sure you have share the video out. Make sure you have the sharer badge on top of the name, and so we will review your stocks if you have that. Okay, yeah. So just before we go into the Q&A, maybe we can also check out what are the counters, that came in today on our traders list, because traders list is a stock list whereby we have put in over the past 7 days based on the daily picks. Once it expired, it will go into traders list. So for traders list, Lcom is in there. It has traded higher today. Even Lcom, I think it should. Let me check. Lcom is only one time. It's around 1037, so it's around this range of 102 towards 107. Okay. So other than that, B Auto also turned out to be one of the signal here. The breakout happened, I think, along 178, and it has continued to trade higher. I think Berjaya related counters will also benefit from the recent Berjaya Foods, trading momentum, and therefore Berjaya Auto is actually having a very good recovery. I think need not talk about BG Corp, but I think selectively under their every segment of the public listed company, it should turn out well. But BG Corp may not turn out well because BG Corp is a conglomerate. Okay. Other than that, we have Bonia. Bonia traded from this range, 202 towards the 212 zone. So this is a trading range that our signal has triggered us, and it has traded higher. So about 10 cents range of trading opportunities. Kim Long, I think, is on the profit-taking activities. Other than that, MSC is one of the good strong ones. Just that today itself, it is after the earnings, and it has traded on the profit-taking activities after the earnings. So there is nothing much to say because it's after the earnings, it gap up. So the risk will be much higher. Okay, so I guess we will take a look at some of the counters. We have 3 counters for now. Please put in more of the questions, and make sure you have shared the video out. Then we can actually review the stocks. Okay. So for Master Pack has been just sideways, ranging from the 2 ringgit level back towards 1 ringgit 60 cents. So it's a 40 cents range right now. It's near towards 170, 180 level, and based on the current position, I think it is hitting on the upside already. It's very less likely to trade higher, but for now, we will trail the profits. If you have the counter in your hand, I think you can trail it by using the 2 bar or 1 bar low, 174 and also 177 as the cut loss point, and trade towards at least, I think, 192 level, this range, 190, 192 level. I think it might, turn out to be a winner for under this upward trending tone kind of movements. Okay. But overall, I think packaging industry will still have a lot of demand. Under this environment, this scenario, we will continue to expect the packaging industry to stay strong. given that under COVID environment, under we are getting more sticky towards food delivery and all these courier packages and things like that. So most of these things will allow the demand on packaging side to go higher. So Masterpack will be benefiting under this environment as well. Okay. Other than that, Eno price is under the plantation. I believe that they are on a pullback because of the very strong upward trending mode. You can see that the pullback is also not as strong. Um, it's just one day and around 1.1%. They are still actually waiting for the results to come in rather than just profit taking activities right now, because it doesn't make sense for them to sell ahead of the earnings, because earnings will be very very strong and they can sell on the gap up position after the earnings. So why they are selling right now? They are just having some mild profit taking activity. So as long as it is holding above the EMA 5 or 2 bar formation, which is around the 180 level, I think that is a good and sufficient uh, amount that we need to believe that it will continue to trend higher, and our next target perhaps is around 2 ringgit zone. Okay, so for Eno. Okay, last two another two companies I have in hand is someone asked about the Mr. DIY. Mr. DIY is a bit tricky here, although the earnings result is strong. The sell down phase has also come in and is below the SMA 200 level. So, given that scenario, I think it's quite tricky to tell whether it should continue to stay strong or it should pull back. But definitely the funds are looking at the recovery team. So this is under the recovery team and consumer sector. And bear in mind, under this very severe or tough scenario, people will also, look out for stocks or value worth, things that is value for money from Mr. DIY instead of going into a high-end shop. So B40, M40 might, shift their consumer, buying of items from big supermarket to maybe Mr. DIY, because Mr. DIY offers more value for money kind of items. So I still think there is a very very good chance for this to continue to trade higher. But one thing is that they need to cross above the 3 ringgit 80 cents level. 3 ringgit 80 cents is very strong and stiff resistance for the time being. And once it is able to cross above this 380, then more upside will be seen for Mr. DIY. Okay, HPMT, let me check. Okay, HPMT is last quarter's result is very very strong. It's out of expectation, and hopefully that they can actually replicate the financial results again. And this is still continuing in its upward, channel, and that therefore we are going to maintain the view that it is uptrend. And so wait, hold on a second. I will draw this. So it is still within the uptrend channel, and any pullback I think is worthwhile to look at rebound buy and trade within the range. I think that is more that makes more sense for the time being. But if I think one day if it is able to break out above 74, 75 cents level, then that is going to be another new zone for them to trade. I think it should be above 80 cents and also towards 1 ringgit. That is for mid to long term position. Okay. Okay, NGGB under the renewable energy related sector, it is just moving just sideways and not much of a movements right now. It's hard to tell, but based on indicators wise, yeah, it is also telling you sideways and not much movements until it can break out above 112 level. Then perhaps there is a good chance towards 121 or even the 132 level. So for now, I think it is quite sideways ranging mode. I don't see it as a strong breakout yet until volume has started to pick up. So for now, it is just sideways until it can show some good volume, and when it happens, I think it should break above 112. I would say that this is not negative bias yet; it is still upward bias. So the chances of breaking up is higher than selling down for NGGB. Okay. TNB, let's check. TNB. Oh, sorry, it's Tenaga here. Tenaga. Okay, Tenaga, it's a bit of on the negative side. Things are not recovering as fast as what we think. So the sell down phase happens after the cabinet has not agreed on when to open up the tourist borders, travel borders. So for now, we can just rely on one thing, which is dividend yield, to guide us whether is it worth to buy or not. And support is around 9 ringgit level. Resistance is around 920 to 930 zone. So that's the resistance. But for now, down bias is still intact, and therefore more downside risk than upside reward. In view of this, we are just using dividend to gauge how our entry will be. But checking at the previous lowest point of around this level here, it is around 880. So I would say that if it comes back towards 8 ringgit 80 cents level, I think there is a very good amount of chance that we are having a very good opportunity to accumulate, because I think the dividend yield will shoot up towards around 8% with the falling prices. So I think you can actually monitor for 8 ringgit 80 cents for the buying opportunity. Okay, I think last counter will be PMB Tech. We'll take last counter for today. Given this scenario, the bearish engulfing bar has happened. It rebounded with bullish engulfing bar, and right now there is a potential shooting star formation that is forming. I will take this as a sign of weakness, that it should pull back from this point, and you may use the trailing stop loss to maintain the view that it might have a chance to pull back. So you are just using that range to throw out your profits. So anything that is falling below maybe this level here around 1835 or 1850 level, then you have to cut your position. But overall, it's still uptrend, just that right now it's going through the consolidation phase. So the weakness, the exhaustion happens because it has started to rally since the 12 ringgit 80 cents level towards the 20 ringgit zone. So that is around 8 ringgit of upside, which is near to 50-60% of the upside already since back then. Okay, so just 1 month ago, around 50 cents, near to 60%, near to 60% of gains. So I guess that will be a sign of exhaustion. You should be taking profits for PMB Tech, and I think that is that makes sense. Okay, that makes sense. If you can check back the EMA 5 earlier on, there is one time falling below that, 2 times, and the third time. So you can also use that as the gauge, for selling off. If it is falling more than 2 bars of black color candles below the blue line, I think you can take profit already. So right now it is still above the EMA 5, and hopefully that it can still sustain above that. But if not, it is falling below that level for 2 bars or 3 bars, then you can start to take profit. Okay, so I think that will be the last review of the questions coming from the audience. Thank you for the time, and I think this week's market will be on the pullback formation because of the very strong rally since 2 weeks or 3 weeks ago. In terms of the FAM KLCI and also small cap index and things like that. So people can start to take profit, but selectively you may also use individual EMA 5, the trading moving average to actually guide you to exit each and every counters. Okay, so I guess I would wish you all the best in trading going forward. Thank you so much, and see you again next week. Thank you. Bye bye.